Hello and welcome to the CNBC Africa Special. I'm Chris Bishop. I'm in Washington, D.C., the host of the World Bank and International Monetary Fund annual meetings. Now this draws experts in investment and development from around the world. Later in the show, I'll be hosting a debate on Africa and investment, energy and infrastructure. But first, let's get a little taste about what these annual meetings in Washington, D.C. of the World Bank and International Monetary Fund are all about. All roads led to Washington. One of the issues discussed at the high-level annual meetings of the World Bank and International Monetary Fund was how to funnel more investment into Africa. The Multilateral Investment Guarantee Agency, an arm of the World Bank, has just opened an office in Africa, in Senegal, in a bid to take the risk out of investment for private investors.
Investors definitely see much higher risk, but also much higher reward. So there's quite a lot of attention going into Africa. We haven't been able to tap into the more conservative investor base, pension funds and insurance companies and sovereign wealth funds. Those I think it would take some different instruments, which we're looking into trying to attract into Africa, but they're not quite there yet. But for private equity funds and commercial banks, of course, and developers, which is this is our bread and butter, they do see the high return, the high returns involved in sub-Saharan Africa, and the high risk is precisely why they come to us. So it's not that difficult to sell.
Now you mentioned the institutional investors and the pension funds. Mm-hmm. What do you think it's going to take to get these guys on board? Because that could be a real game changer for Africa.
Yeah, I think the key is really de-risking every aspect of a transaction. So last year we were able to participate in a project bond for Turkey, for a PPP hospital project in Turkey. And a combination of MIGA covering breach of contract and transfer restriction and convertibility, plus a liquidity instrument by the EBRD, was able to get a rating by Moody's of 2 notches above the sovereign to get it to investment grade. Once you get it to investment grade, it's much easier to attract institutional investors. So that's the kind of structure that we're looking to replicate in Africa. Obviously, you have to find the right country and the right project. But I think if we can do that, we can really tap into a very different investor base, which we're going to have to do in order to achieve the Sustainable Development Goals.
From your experience, I know it's a very new office, but MIGA's been working for 30 years. What do you think are the interesting areas in the continent? You mentioned Zambia just now, for investors right now.
Yeah, I mean, I would say that in the West, the main countries of interest are Nigeria. Obviously, it's a huge market. Ghana, Cote d'Ivoire, and Senegal. Those are really the countries that we sort of hear the most inquiries about. On the East, it's Kenya, Uganda, Tanzania to a lesser extent, and Ethiopia increasingly, because they're really starting to embark on a true privatization program. So I think there would be a lot of opportunities in Ethiopia. And then, more towards the south, it would be Mozambique, Zambia, and South Africa. And South Africa has been an interesting case. We used to have zero exposure there. Most investors didn't see any need for PRI or credit enhancement in South Africa. But lately, as of today, actually, it's our second largest exposure globally, mainly because of our credit enhancement product, which enables us to support commercial banks lending to state-owned enterprises, to the sovereign, to municipalities, with what is essentially a AAA credit wrap. So they can get longer terms, they can get better pricing, and it ultimately passes down to the benefit of the government. So South Africa has been a really big market for us in Africa, but obviously trying to focus on more supporting the IDA, the poorer states and fragile states, moving forward, as this is one of our major focuses. But we can't ignore the opportunities there.
The West African nation of Guinea is trying to reform its economy and open up to more foreign investors. The country, which is richly endowed with natural resources, is looking to diversify its economy to spur economic growth.
For foreign investors, we continue to reform, to make best reform, to offer to different investors more vision by performing in the doing business, different position in doing business, by create a best situation to let them come in Guinea, put money and develop the activities, and also we try to help them to have securities for their own person, securities for the goods, their money also, and we try also to have for them some incitative measure in our different code, investment code, fiscal codes also.
What areas is Guinea looking to promote in the economy?
In different areas, particularly in mines areas. In mine, for example, we have now a lot of investment, and we, as we have a lot of natural resources, we would have more investors in this side also. In hydro, also, you know that we have a lot of river, and we will like to have more investment there to offer power to our entrepreneurs, and also to export power in to our neighbor. Also in agriculture side, we would like to have a lot of investment to develop and diversify our economy.
The World Bank projects that agriculture and agribusiness in Africa will grow to a $1 trillion industry in Africa by 2030. When will the investors see Africa's rich red soil as pay dirt? The rest of the world is pouring concrete over its green and arable land. Surely food will run short, opening up lucrative export business for the farmers of Africa. This is one of the questions I put to agribusiness sector manager for the risk guarantee arm of the World Bank, MIGA, Nabil Fawaz.
I agree. I think Africa's potential is in agriculture is tremendous. There are certain areas of Africa that have still lots of water and lots of arable land that are not being cultivated, that is waiting to be basically cultivated and exploited. I think through good policies and from governments in directing into agriculture and reforming the sector, they could definitely tap into agriculture as a future industry that can bring also quite of wealth building, if you like, into the continent.
One of the feelings I'm getting when I talk to foreign investors there, and also people in government as well in Africa, is that they get the feeling that agriculture is not seen as, shall we say, sexy by foreign investors. It's seen more as sort of subsistence rather than production, even though there are a lot of great projects.
Correct.
What do you see?
No, I think it is the wrong approach. It's definitely it is essential. It is very important. Humanity is increasing in numbers, so the food sources are going to grow in importance. So actually, on that level, Africa and its potential of growing food will be even more important at that point in time. And you need to start now for planting and having the land ready for the future, and to have the investments and the infrastructures of irrigation and the land to be in place. So I do not see it as dirty. Actually, it is one of the old jobs. There was no manufacturing in the past or industrial before the Industrial Revolution, but always agriculture was there, and it is there to continue. So it is not something that at all is disappearing.
How far ahead do you see the tipping point where, how can I put, for want of a better word, there's panic now about world food supply, as you say, 9.5 billion people who need to be fed. How far ahead do you think that is? We are not
that close to a panic mode, but I think because humans, we are always we're very creative and always industrious in a way that we're always ready to jump into the next opportunity and then to start growing more food or developing some agricultural fields even more. So I don't think we are at a tipping point at this point in time, or anywhere close.
What are the big risks when you're selling investment projects in Africa? What do people talk about?
The risk that we are running a lot in Africa in agriculture usually tend to be land ownership, the lack of registration of land and multiple ownership of lands, and that makes it very difficult, especially in our line of business, because an investor is buying a land and then they are investing, and only to have to go into legal issues with some with the village or in the province or in the government, with the government, regarding multiple claim on that land by other people, and then they go into litigation, which tend to be costly for investors. So it is very important to have land registration and to reform this area to be able to attract further investments and make the process much simpler to acquiring land and developing it into agriculture.
What kind of companies around the world do you think should be pouring money right now into African agriculture?
We are seeing it from both sides. We are seeing from the large agricultural companies, the Cargills of the world, if you like, the very large agri-food and agri-processing companies. But also we are noticing it from our side that also private equity funds with concentration on farming and agriculture that are also stepping in and crowdfunding basically through all the limited partners, the funds, to come and invest in agriculture and develop agricultural lands in Africa. And in our portfolio and the work that we have been doing, we have had a lot of the private equity fund that are coming in and buying land or buying existing farms and rehabilitating them, maximizing its productivity and productivity.
And just one other question before we finish is that manufacturing as well.
Yes.
That's another part of your expertise. There's a lot of talk in Africa right now about industrialization.
Yes.
The continent doesn't want to export its commodities. It wants to make more out of what it has.
Correct.
There's a lot of talk about it, but again, I'm not really seeing massive industrialization projects.
Yes.
Have I got this right or have I got this wrong?
No, you got it to a certain extent right. It is not still the idea of Africa is still into exporting raw material versus adding value to this raw material. And our aim is to try to push value added into the raw material, so the governments and these nations can also yield more profits, if you like, and benefits from these raw materials. They are exporting either their mining, the mining raw materials or agriculture. So we are trying to push them into manufacturing and into adding value, so they can send out semi-finished good on the manufacturing side, or on agriculture, even to agro-processing, to finalize the process in country, add jobs, add new manufacturing and agro-processing plants before shipping out the goods to the markets.
We'll be getting more views on Africa and investment and development after the break. Do stay tuned for this broadcast from Washington, D.C. Welcome back to Washington, D.C. and the annual meetings of the World Bank and International Monetary Fund. And we're going to hear a lot more in this half about the views on investment and development in Africa. Just to start off with, I would like to invite upon the stage here Mr. Mohammed Fall, the Chief Underwriter of MEGA, who's going to give us an opening message.
We're thrilled to have everyone here today, which is the kickoff of our 30th anniversary here at MEGA. Today, we'll be talking about the subject of innovating to mobilize private capital. At MEGA, we believe that cross-border private capital is essential for helping end extreme poverty and boosting shared prosperity. To attract such capital, governments and development finance institutions must apply innovative tools that lead to an investor-friendly environment. This event will showcase how, driven by national priorities, MEGA works with governments, the private sector, and other World Bank Group agencies to drive capital in innovative ways to high-impact sectors. To get us all on the same page, we now have a short video showcasing how Jordan drew private capital to its ambitious solar energy program.
To reduce dependency on oil and gas imports, Jordan is aiming to ramp up the contribution of renewable energy to 10% of generation capacity by 2020. A third of this new capacity will be from solar power.
This will help diversify Jordan's energy mix, increasing energy security and reducing the reliance on fuel imports.
The country is using public-private partnerships to help pay and has managed to attract more than $3 billion for renewable energy projects in the past 3 years. A national renewable energy program has helped transition Jordan off public sector financing.
The government had a very good program with a bankable power purchase agreement and a very good framework for investors to feel comfortable to come in and develop solar. And it was sort of a win-win for the government and for us as investors. So we decided to go ahead and do 4 projects.
All 4 projects entailed construction and operation of solar plants that will sell electricity for 20 years to the national utility. The Ministry of Finance offered guarantees to each of the project companies to ensure the utilities' obligations are upheld.
So MEGA is providing 4-point coverage to Adenium for the solar projects in Jordan against the risk of breach of contract, expropriation, transfer restriction and convertibility, and war and civil disturbance.
MEGA played a very important role for us as we were developing this project. Getting an extra layer of insurance or protection is always welcomed, and we worked with MEGA to get that. For us as foreign investors, made us feel a lot more comfortable that in case something happened, not only did we have the government guarantee from the Ministry of Finance, but also MEGA could step in and help us claim some of our equity that we had invested.
MEGA is providing a guarantee on the government of Jordan's guarantee, which I think provides a lot of comfort to the investors that their investment is going to be safe for the 20-year PPA that is underpinning this project. I think there's a really crucial demonstration effect. The success of round 1 very much led to subsequent rounds going forward, attracting more investors who wanted to come in, who were interested in those projects, and at the same time bringing the tariff down, so that on an aggregate basis, the cost of electricity in Jordan is constantly on a downward curve.
A third round was announced towards the end of 2016 and is currently in the offing. There's much from this example that can be applied to other countries and other sectors.
Well, there's the inside story on this very interesting solar power project in Jordan. Philippe, if I could start with you. I understand that there was a very competitive bidding system that was set up behind this project here. How difficult or otherwise was it to bring the whole project about?
The first move is the government. The government decided we go to on solar. We are 93% dependent on imported energy. So that was a deliberate strategic decision. Then they basically changed a number of laws. The last one is a series of laws, the last one in 2012, which was the renewable energy law. That opened the floor. Very, very important. I cannot stress it enough. Then what we did is try to pool to get the best price possible, to pool what we call the 7 sisters, different plants together that we auction, and then we structure the finance and the guarantee. So this is a very good example where 3 institutions of the World Bank work together, each in its particular role. So we structure the finance. For us, it's working with the government on the bidding documents, making sure scalability is a key word once you go from the legal changes, regulations, to actually implement. Because if you do for small bits and pieces, the price will be much higher. I mean, it's that simple. So that's one of the key ingredients. And if I can put a plug there, this is something that we want to see more of, because for a long time we were relying on investors coming and saying, IFC, here is an investment project. Can you structure the finance? With the new program that we have that is scaling solar, we are much more proactive. We go, work with government, find the location, very important, how far from the grid, what is the orientation to the sun, is a lot of technical stuff. And then you bid, you auction, which is very proactive. You go after the investors, you don't wait for the investors. I know it's a little point, but it makes a huge difference, because all of a sudden you go from reactive to proactive. And that, the scaling solar, for me, is one of the model of the things that we want to do more of in IFC going forward.
Minister, if I could turn to you now. What is the ability, do you think, of emerging African nations like Ghana to pull in the kind of investment to create projects like this?
Well, thank you very much, and thanks for the invitation. I think really for Ghana, there's been quite a sea change in the past 9 months. And I guess in our sense is a new generation of sort of political leadership infusing government with private sector participants. And as you can see from what has happened in the past 9 months, we inherited a pretty difficult situation, 9.3% deficit, inflation of 15%, and running a primary balance which was negative, meaning we're borrowing to support our loans. In addition, at a 73% debt to GDP ratio, there was very little fiscal space. But I think that becomes the real constraint to attracting private capital. And that also leads to transactions because your risk levels are so high. So in the past 9 months, we've just tried to de-risk, in a sense, the country, in which we've been able to now grow 6.6% the first quarter and a 9% the second quarter. We are running a primary balance which is positive. Inflation has come down to 12.3%, and the central bank has also been able to ensure that our coverage for imports is increased to about four months. So that then sets the stage to de-risk ourselves. And as you realize, these past few months, both Moody's and S&P and Fitch have upgraded that. It then begins to set the platform. But we have to be really cognizant of the issue of debt sustainability because everybody is throwing debt at you. And we therefore need to say, look, the country is being de-risked. Look at the cash flows that will come from the projects that you want to do. And we are there to ensure the rule of law, avoid expropriation, but assure you that our commitment to fiscal consolidation, macro stability, should be the key elements.
If I could bring it to you, Mr. Winters, now, in the banking and investment world, what do you think foreign investors worry about when they look at projects in such countries as we've seen, Jordan, maybe even Ghana?
As the Minister just said, of course, the first thing that we focus on is the sustainability of the country's finances itself. Whether it's rating agencies or the way banks assess credit, we always look first to the sovereign and then at the companies that are operating within the country. So when we have a government that takes the sorts of steps that Jordan has in their own ways, but certainly Ghana has in the last year, it's a big confidence booster. But of course, that's the starting point. It goes beyond that. There's always questions about rule of law, the predictability of both the politics and the resolution processes in the judiciary system. It's critical that infrastructure is built and developed, and also that confidence is built. I think we look very specifically at the ability to enforce the contracts that we enter into. And we look at the risk parameters that relate to the specific project, but also to the country. When we get to the role that MIGA and or other international agencies can play in that regard, it's helping us to understand both the underlying capabilities and predictability of the infrastructure that's in place, but also how we can risk share in a way that can allow each of us to take the pieces of the risk that are most suitable for our own balance sheet or the balance sheets of others that we can bring in, whether those are international investors, other banks, or other international agencies.
Keiko, if I come to you now, I mean, this idea of taking the risk out of investment for foreign investors, it's not a unique thing. The African Development Bank does something pretty much the same. But how is MIGA, you think, trying to tackle the problem head on of taking that risk out?
This project, we gave private investors the confidence that the Jordanian government would honor its commitment. We did this by ensuring the 4 typical political risks. Let me raise it. Those are the 4. Number 1 is the currency incompatibility and transfer restriction. Number 2, expropriation. Number 3, warrant civil disturbance. And the last one is a breach of the contract by government. In Jordan's case, not meeting its obligation under power purchase agreement. Keep in mind, the project that we are discussing here has a long tenure. This project is over 20 years. In that many years, administration may even change. Also, the private investor side got benefited to have this going. At the same time, government is benefited make this project move without investing themselves. As Mr. Minister, you pointed out, many countries, including Jordan's, are carefully managing their balance sheet.
Well, it's been a fascinating few days here in Washington, D.C. I'm afraid that's all we've got time for on this program. From me, Chris Bishop, on Capitol Hill, at the CNBC Africa Special, it's goodbye.